Wednesday, December 26, 2018, Maneco 64, home of alternative economics and contrarian views. This morning I want to talk about what has government done to our money and the case for 100% gold dollar. And that's the title of a book by Murray and Rothbard. And I highly recommend this book. Murray and Rothbard. He's passed on, but he was an economist from the Austrian School of Economics, School of Thought. He did go to Columbia University, and I think he was the student of one of the Fed chairmen at the time, I think in the 50s or something, a future Fed chairman. I forgot which one it was. So he was in the mainstream, but he was a proponent of the Austrian School of Economics. And I'll put a couple links below if you're interested in the book. One link is for the hardcover or the paperback. The other link is for the Kindle edition. It should be cheaper than, the hardback or the softback. I personally prefer to have the book physically, but of course it's up to you to decide. And also about representative from West Virginia, Representative Mooney, and a proposal he put through into Congress to define the dollar as a fixed weight of gold again, which is HR 5404. This proposal was put through in March this year. And it kind of is interesting when you look at this book. Before I go into that book, I'll look at what the markets are doing this morning. In the UK, it's a holiday here. It's called Boxing Day, I think in Canada as well. But the markets are trading. The futures for the US markets are trading. The foreign exchange markets are trading. And we've seen a bit of activity overnight in the markets. We've seen the Dow be down as much as 250 points, the Dow futures. It opened quite weak. It has recovered though overnight. So it's 9:12 a.m. London, so I'm a little later than usual. The price of gold right now is making a new high, recent high. We're at 1272.29, up about 3. The high's been 1275. Silver is at 1483, up 5 as well. Silver got up almost to that level, 1491, which I think is really important. If we go above that level, we could see quite a bit of momentum buying. It could trigger stops there. So we're very close to that. The Dow right now is at 21,728. It's up about 29 points. And the low was 20,452. That was right on the open overnight, last night at 11 p.m. London or 6 p.m. New York. The S&P is at 2346, up 6. It has been as low as 2315. So the stock market stabilized for now. Of course, we had a really big drop Christmas Eve, 650 points in the Dow. Not out of the woods yet, but I see that President Trump, one of his Christmas messages, which is quite amazing. Trump urges Americans to buy the dip, voices confidence in Mnuchin and Powell. That doesn't really make sense about Powell. He was saying the other day that the problem is the Fed, but now he's got confidence in the Fed. So, not too sure what to make about that. Currencies, they're a little weaker this morning, but marginally. The pound is below 127, is at 126.92, down about 10 pips, which makes the sterling price of gold this morning above 1,000, because we've got 1272 gold in dollars and 126.92 cable. So we're around 1,002 or so in the price of gold in pounds. I think a key resistance technically is around 1,008 and 10. If we break through that level, it could accelerate. What will drive that? Is that going to be the dollar price of gold or the pound going down? I'm not sure. We'll have to wait and see. Euro is at just below 114, 113.95, down 11 pips, 0.1%. The dollar is marginally stronger against the yen, 110.52, up 8 pips. Dollar is down 0.15% against the Chinese yuan at 689.26. Oil is still quite low, 43.20. It's up a little bit, the WTI, and Brent is at 51. It kind of, this drop we've had in the last few months in oil reminds me of the huge drop we saw during the '08 crisis before everything kicked off. If you remember, oil got up to almost 150 and just dropped almost in a straight line towards like 45, I think. So that could be, a symptom of that things are not great in the real economy. The 10-year yield dropped quite a lot the other day. It's now 272, down 1 basis point. Let's have a look at the curve. The yield curve, it's kind of steepened now. The 2 years at 254, and the 5 years at 256, and the 10 years at 272. So it is normal as it should be, the curve for now. So what has government done to our money and the case for 100% gold dollar? First of all, the thing with the Austrian School of Economics in their books, most of their books, I would say, is that it's not just for economists, it's for anyone who wants to read it, because they make it really interesting and they explain it in layman's terms. And that's the great thing about the Austrian school. It's not some PhD text, neo-Keynesian with loads of equations and charts, saying if we tinker with this, investment or government spending or interest rates, this should do this to the economy. No, the Austrians look at things more in the broad sense. As Mises says, they look more at human action. But one thing that I've learned from the Austrian school, and that started when I started, what woke me up to the Austrian school was when I started buying gold in 2002. Gold coins, silver. I started looking into gold. Then I found a lot that I didn't know about the monetary system, and a lot of the literature and information on the internet was from Austrian school economists. And I found that the Austrian school actually proposes that we go back to free market money, be whatever that may be. But historically, it's been gold and silver, but it could be anything else, right? Murray Rothbard is trying to make his point that gold, is money. And I don't disagree with him. If you look back thousands of years and how gold and silver as well maintain their purchasing power, he's got a point. The great thing about this book for the average person who's not an economist, who doesn't plan to become an economist, is that it teaches about money, what it really is, and how it's evolved through time. So I highly recommend it. I mean, most people, when you talk about money, they think it's just a piece of paper or an entry in the computer now. They don't, and I don't, they haven't been taught properly. Even the people who are supposed to be the professionals, the economists, the Wall Street traders, economists, bankers, the politicians, very little of them know what they're actually dealing with what money really is. And I think it's really important that we know that. I worked in the city of London in finance. I started my career in the late 80s, and it took me until early 2000s to kind of realize what it really was. Before that, I was just dealing, in pounds, dollars, Deutschmarks, and bonds, but I didn't really look underneath the hood or the bonnet, as the English call it. So first, I won't go through the whole book, but I'll go through what's written here from the introduction. It says, from the introduction by Murray and Rothbard. And this is what he says. Let us first ask ourselves the question, can money be organized under the freedom principle? Can we have a free market in money as well as in other goods and services? What would be the shape of such a market? And what are the effects of various governmental controls? If we favor the free market in other directions, if we wish to eliminate government invasion of person and property, we have no more important task than to explore the ways and the means of a free market in money. Well, now you can understand why mainstream economists, central banks, don't like the Austrian school, because they're actually proposing free markets in the sphere of the economy that the Keynesians and the central bankers want to control and have the government be involved, which is money, right? Central banking. The way he goes about explaining what money is and what government has done to our money, it's to start at the beginning. The Austrians call it the regression theory analysis of how people used to interact prior to the money economy. And the money economy, all that means is that it's an economy where the actors in the economy use money to exchange goods and services. Prior to the money economy was the barter economy. So you exchanged in the barter economy, if I grew potatoes and I wanted some steak, I'd exchange that with the farmer that had, cattle, and I give him a sack of potatoes for 2 ribeye steaks. I don't know. That's how it worked. But the problem with that, it doesn't facilitate indirect exchange. What if the cattle rancher didn't want to buy potatoes, and I wanted a steak, but I only had potatoes? So that's what money does. It facilitates indirect exchange, but it must be something that everyone in the market values and doesn't mind holding. And through trial and error, people have found that gold and silver are such things. And yeah, a lot of you might say, well, I can't take gold or silver to the shop now and buy things. Well, only because governments have banned, they banned in 1933 Americans from using gold until 1975. And even after that, you couldn't, the legal tender laws didn't allow you to pay your taxes with that. You had to use Federal Reserve notes. In 1964, after 64, they withdrew silver from the system. You can't use that. And if you use that to pay, I could use a 1964 quarter to pay for something, 25 cents. But that would be a waste because the silver in there is worth a lot more than 25 cents now. So that's what government has done to our money. And it's not only in the United States, but throughout the world. So I would say, yeah, we've been in a fiat money system since 1971. We had a vestige of a gold standard prior to that, not really a gold standard domestically in the US nor in Europe. So what about HR 5404? Well, this was a proposal to the 115th Congress of the United States on March 22nd, 2018, 322. Some people would say, wow, that's the skull and bones, 322. Well, I don't know. Some people find things in everything. Be as it may, this HR 5404, it's a bill to define the dollar as a fixed weight of gold. Well, that's the key word, fixed weight of gold. And I'll read here about the bill. So it was proposed to the House by Mr. Mooney of West Virginia, introduced to the House the following bill, which was referred to the Committee on Financial Services to define the dollar as a fixed weight of gold. Be it enacted by the Senate and the House of Representatives of the United States of America in Congress assembled. Section 1 findings. Congress finds the following. There's 12 things that they find, and I'll go through them quickly. The US dollar has lost 30% of its purchasing powers since 2000, 96% of its purchasing power since the end of the gold standard in 1913. Under the Federal Reserve's 2% inflation objective, the dollar loses half of its purchasing power every generation, or 35 years. So you can see why the inequality is growing. You kind of wonder whether Mr. Mooney read this book. I would probably say he did. American families need long-term price stability to meet their household spending needs, save money, and plan for retirement. I've talked about that. Right now, in the past, saving money was actually saving actual money. You can't do that anymore. You have to speculate in the stock market. And that's what President Trump is telling Americans to do. That's why I'm not too sure about that guy. 4, the Federal Reserve policy of long-term inflation has made American manufacturing uncompetitive, raising the cost of U.S. manufactured goods by more than 40% since 2000, compared to less than 20% in Germany and France. That's 4. 5, between 2000 and 2010, the U.S. manufacturing employment shrunk by 1/3 after holding steady for 30 years at nearly 20 million jobs. 6, the American economy needs a stable dollar, fixed exchange rates, and money supply controlled by the market, not the government. Some people might say, because some people argue that floating rates are a free market, but no. The thing with money is that it should be a fixed measure of value. So you're not going to change the exchange rates of a weight of gold, between countries. It's like every day having a different measure for the foot or for the meter or for weights. It would make things really complicated in life, and that's what they've done with money. 7, the gold standard puts control of the money supply with the market instead of the Federal Reserve. 8, the gold standard means legal tender defined by and convertible into a certain quantity of gold. 9, under the gold standard through 1913, the U.S. economy grew at an annual average of 4%, 1/3 larger than the growth rate since then, and twice the level since 2000. 10, the International Gold Exchange Standard from 1914 to 1971 did not provide for a United States dollar convertible into gold, and therefore helped cause the Great Depression and stagflation. He's right. 11, Federal Reserve's trickle-down policy of expanding the money supply with no demand for it has enriched the owners of financial assets, but endangered the jobs, wages, and savings of blue-collar workers. 12, restoring American middle-class prosperity requires changing monetary policy authorized to Congress in Article 1, Section 8, Clause 5 of the Constitution. So, very simple. Will that bill eventually get passed? Well, it could. If there is a crisis and people lose confidence in the Federal Reserve. It looks like President Trump still has some confidence in the Federal Reserve. That's what he said. He told you to buy the dip. This would be great not just for the United States, but as the leader of the world in many things. That would lead to other countries, following the lead of the United States. So, I've spoken about this book many times, but as I get new subscribers all the time, I think it's really important to talk about this and this book, What Has Government Done to Our Money? The Case for 100% Gold. So if you enjoyed this video, make sure you hit the like button. If you haven't subscribed to the channel yet and you're thinking of subscribing, there is the subscribe button there. and make sure you share it far and wide, this video. You can also follow me on Twitter, Steemit, and DTube. I wish you all a great day, and I'll talk to you later. Bye.